We start off with Zoom. Whiz, pop, bang. However you slice it, Zoom's shares staged a gigantic rally after posting a blowout earnings quarter. Its 40% jump today now gives it a market cap bigger than Lowe's, UPS, IBM, and Citigroup. And it is about 3/4 the size of Cisco, which, of course, is a similar product, and 83 times the revenue. So what do you make of this giant move today? Pete, what do you say?
Well, it's pretty incredible, Mel. I don't know how often we've been able to see a stock that's actually jumped by 40% in a single day, but it ran into earnings. We've seen nothing but bullish paper in here for the entire year of 2020. They've been buying and expecting movement to the upside, and it's been delivering. And the interesting thing, I think, Mel, is when you look at the numbers, yes, the numbers were astounding. When you look at the revenue numbers and the earnings beat and all the rest of those things, it's incredible. But I think what stands out for me is that I look at this company and you just wonder, there's not a short squeeze going on here. Oftentimes we see stocks like this make these kind of moves, and a lot of that might be a short squeeze. That's not the case here. It's not a very large short position. So I think this is just an amazing stock that has continued, and people look at this stock and they think to themselves, is this stock going to be around after the pandemic? And I think so far people are thinking yes, and it is a verb. So I think for all those reasons, this is a stock that people better be careful of, because I don't think you want to short this name still.
Yeah, to Pete's point, the short interest, according to FactSet, is just over 5%. Dan, you know, this is an amazing company. Yes, the CFO on the call, though, did say that the sequential revenue growth would be down third quarter, fourth quarter, and yet analysts are saying that is just too conservative. It is amazing what the analyst community and investors are looking to look past at this point, even with this giant run.
Well, Mel, decelerating from 350% year-over-year revenue growth is pretty much a certain, but I think more importantly, you know, it's the period over period, the quarter one to quarter two, 100%. I mean, listen, this caught a lot of people off guard, but I think you kind of mentioned a few things here. Even with the high expectation, the stock was trading at all-time highs into the print. You know, the company's guidance for the full year revenue, like you said, it places it at a place where it's just not moving the needle for some of its big competitors. I think it's really important to remember, yes, they have a far superior product to what Microsoft has, to what Cisco has, to what Google has. But at some point, the landscape is going to change. The demand pull forward in such a short period of time is going to change. And the stock is really not going to be able to kind of grow into this valuation because they have pulled forward so much. So that would be the only risk here. But when you see a stock gapping up, you know, 25% and closing on the dead high of the day, having a market cap of $130 billion, you know, you're saying to yourself, this is a full-blown mania. This is not about Zoom and their ability to capture market share or win the pandemic, as some people like to say. This is a market mania. We saw it last week with Salesforce. Salesforce also gained 25% at a clip. That was about $40 billion in market cap. There's just a massive FOMO trade going on here. It's not going to end well, but in the meantime, you'd have to be crazy to try to short it.
One thing that jumped out at me in the quarter is the growth in the customers with fewer than 10 employees. That was up 762%. So smaller businesses becoming a bigger part of Zoom's mix here, Guy. But if you believe that there's any sort of uncertainty about the economy, these are the customers that might churn out of Zoom.
Yeah, no question. But, you know, Pete said it. Zoom has become a verb. It's like it's become the same way Netflix has become part of the vernacular in this country, and that's a very powerful thing to have behind you. So I totally agree. This move yesterday, obviously, and today took me by surprise. No question. I didn't see this coming at all. As a matter of fact, I thought that post-market move yesterday was the move to take profits into. So that proved to be wrong. But just in terms of, you know, what's in the stock, it is now effectively the size of Texas Instruments. And you're talking about a company, again, I understand the growth. I get all the metrics. I get it was an outstanding quarter. But they're still going to probably be less than $3 billion in revenue. And just for comparison, why not? They're now significantly larger than Boeing, which I know everybody has heard of. And I'm not comparing the businesses by any stretch, but just for comparison on the revenue side of things, Boeing's going to probably have $75 billion or so in revenue. So you have to ask yourself at what point all this growth priced in, and I have to believe we're getting pretty close.
So is this, Steve, in your view, I mean, I think this all boils down, and for so many stocks in this market at this point, it all boils down to whether or not you believe there are the fundamentals to back these amazing stock runs, or if it's all momentum. So what do you say specifically about Zoom's run?
Yeah, there's no fundamentals that can back up. I get the whole 4 times on revenue. I get the whole thing. But when you look at the RSI, it's got a reading of 88. You look at the chart, you understand why there's an RSI of 88. It's a flagpole right now. So when Pete talked about short interest, and that's not the reason, this stock will be shorted. So now Dan had said you don't want to short it. I totally get that too. But this one looks like an option to me on the world never getting any better. And to your point, the metric that you just used, that it's employees under 10, I mean, why aren't they not FaceTiming at that point with 3 or 4? Why are they not using other competitors? I can't see this being a sustainable revenue stream going forward. This just speaks to how much the investment community was caught off sides. We remember when the stock came out, Melissa, we around the desk started talking about the limited amount of customers that they had and that it wasn't going to be a viable business. That blew out the doors. I don't say you go out and short it tomorrow, but I think the day is near. This is a sign of the top in the market, in my opinion.
Well, we were talking about all the potential competitors out there, Dan. I mean, right? We were talking about Microsoft, and we were talking about Google, and we were talking, I mean, all these various things. Why with Zoom? Why would companies, and yet here we are.
Well, it's very simple. You know, it's just a far superior product, a far superior user interface. There's a reason why people aren't FaceTiming. It's not as stable. You can't plan the meetings. You can't record them. You can't have the security. There's a whole host of reasons when you get into the enterprise, even large and small. You know, schools are adopting the heck out of it. I think what you're also going to see is that you might have a stickiness for this product for some of the free users, which really is a lot of cost for them if you can't convert them. And then you say you may have some churn in some of those smaller businesses that don't survive. But there's no doubt about it. When you think about Cisco, the founder of this company came from Cisco. He ran the WebEx product. He left Cisco because he thought it sucked. Okay, and he built a far superior product. Cisco's going to have $49 billion in revenues of that. Less than 10% of that revenues comes from their collaboration division. At some point, they're going to have to get really serious about this and take Zoom on, because that's the only division that they have any growth in their company. And maybe you see them trying to spin out that division and unlock some shareholder value when you see this company have, again, 75% of the market cap of Cisco, a company that has, 20x the amount of sales. You have to start scratching your head and saying, what the heck is Cisco doing here?
Can you say that word on TV? I guess you just did, and we didn't get bleeped out or anything. So,
Heck?
Yes, heck, exactly.